Elon Musk has just stirred up a storm by smoothly snatching up Tesla's rival, Ford Motor Company. Yep, you heard it right. An iconic titan of American automotive history is now officially part of Musk's ever-growing empire. Now you might be wondering, how did Elon pull off such a mind-blowing heist without raising an eyebrow? And how does this affect the industry? I mean, these two are top-toe EV sellers. So is Elon going for a monopoly? Let's break it down. What's the big deal? Well, beyond being the top two in the league, they have been fierce rivals for as long as anyone can remember. So you can imagine the collective gasp when this news dropped. It's absolutely wild. These two powerhouses have been competing for supremacy in the auto arena like heavyweight boxers in a title fight. And right, slowly but surely, Ford has been managing to snag a sweet slice of Tesla's market pie. So it was clear that Elon needed a master plan. And, being the genius billionaire that he is, he executed it flawlessly. And guess what? His grand strategy is already in motion. You know the saying, sometimes you've got to crack a few eggs to make an omelet. Well, Elon definitely took that to heart. And his strategy has got a lot of industry experts scrutinizing him. You see, this is not just about spending some cash to acquire a rival. It is much more than that. Now, is he doing the right thing? Well, you tell me. I will just break down what's happening as simply as possible. The need for Ford. Well, a lot of analysts and investors are starting to raise an eyebrow, questioning whether we're witnessing an epic bubble inflating around Tesla's stock. This isn't just idle chatter. It's sparking quite a buzz in financial circles. Legendary hedge fund manager and long-standing Tesla critic Lakander has even gone as far as to label this situation as potentially the biggest stock market bubble in modern history. He's not tossing around wild claims for kicks. He argues that Tesla's business model is bracing for some serious challenges ahead. A drop in demand, coupled with a lack of new model releases until 2025, could send the stock price tumbling down to an alarming $14 a share. That would mean an astonishing 91% decline from its current standing. Tesla's stock has already taken a significant nosedive, plunging nearly 60% from its all-time highs. It appears that the excitement surrounding this electric vehicle powerhouse is beginning to wane. Analysts are voicing serious concerns about Tesla's ability to maintain its growth momentum in an increasingly cutthroat EV landscape, where traditional automakers are ramping up their efforts and rolling out their own electric options. Let's not forget about the earnings. They're looking pretty bleak. Lakander warns that Tesla's profits could shrink by an eye-popping 50% over the next year, which definitely adds fuel to the fire of bubble fear. He highlights that Tesla heavily relies on just a couple of models, the Model 3 and Model Y. So if sales for either one stumble, the company could find itself in serious trouble. Now, investors who believe the stock is wildly overvalued have begun to place their bets against it, anticipating a downward trajectory. But short selling is no walk in the park. It's a high-stakes gamble. If the stock price miraculously climbs instead, short sellers can find themselves scrambling to cover their positions, leading to potentially catastrophic losses that might make your stomach churn. And let's take a step back for a moment and frame this situation against historical context. This scenario feels eerily reminiscent of past market bubbles, where stock prices soared based more on hype than solid fundamentals. Tesla's stock is currently under scrutiny, with a storm of concerns swirling around its valuation and the looming prospect of significant earnings declines. Can Tesla's current lofty valuation hold its ground? Or is this bubble on the brink of bursting? Either way, Tesla needs a safety net, and Ford can provide that. And this is the first reason why Tesla needs Ford. But there are two more key reasons. But before we get to those points, how exactly will Ford act as a plan B for Tesla? Survival of the fittest. Well, if you have noticed over the course of 2024, Tesla has been rolling out significant price cuts across their entire vehicle lineup. And talk about a shakeup! These audacious reductions in the electric vehicle market have triggered an all-out price war that's turning the industry upside down, with Ford feeling the most heat among the competition. This fierce rivalry has placed a heavy financial strain on Ford's EV division, making them rethink everything from their production timelines to their long-term strategies. We're not just talking about a slight dip in profits here. It's like a full-on scramble for survival. Competitors are hustling to keep pace while staying relevant in an electrifying world that's shifting faster than most can handle. Traditional automakers, especially legacy giants like Ford, are facing immense pressure that's squeezing profit margins tighter than ever in this brave new era of EV pricing. In fact, Ford is now facing a significant hiccup. They've had to push back their ambitious goal of producing 600,000 electric vehicles annually. Initially aimed for the end of 2023, that target has now been shifted to the end of 2024. So, what prompted this massive change? The demand just hasn't lived up to expectations, and Tesla's price cuts didn't help one bit. Ford's CEO, Jim Farley, has been refreshingly transparent about the situation. He's stated that the pricing crunch is really putting a strain on their production goals. Plus, customers aren't as eager to spend extra bucks on EVs as they were before. Their EV arm, known as Model E, posted a jaw-dropping loss of $700 million in the first quarter of 2023 alone. Yes, you read that right. $700 million. That equates to a staggering negative margin of over 100%. In simple terms, for every dollar they sell from EVs, they're basically losing a dollar right back. And hold on, it gets worse. Ford is projecting these losses to skyrocket to a staggering $3 billion this year, up from the $2.1 billion they reported last year. With material and production costs on the rise, the financial pressure is mounting, exceeding what they're bringing in from those EV sales. Here's where it gets even trickier. Ford's variable costs are surpassing the revenue generated from each electric vehicle sold. This means that the more EVs they sell, the deeper they plunge into the red. Can you believe it? Ford is essentially buying market share at an enormous loss. And that's not exactly a winning strategy if you're aiming for profitability. So, what's Ford's game plan? Well, they've been pushed into a corner and have also had to lower their prices, especially on popular models like the Mustang Mach-E. Come January 2023, Ford announced price reductions that ranged anywhere from $600 to a staggering $5,900 across different models, all while Tesla had just slashed the base price of the Model Y SUV by an eye-popping $13,000. These maneuvers are part of Ford's relentless struggle to maintain their competitive edge in an ever-shifting market landscape. Meanwhile, experts are sounding the alarm, warning that Tesla's aggressive pricing strategy could upend the entire automotive industry. Legacy players like Ford, already weighed down by high costs, face tough choices ahead, and that's exactly the outcome Tesla aimed for. Let me explain. So what's Ford going to do about this? Let's dive into the nitty-gritty of those production setbacks first. Ford isn't just missing the mark. It's setting a whole new standard for delays in the EV game. Take that much-anticipated three-row electric SUV everyone's buzzing about. It's got a shiny new launch date now, moving from 2025 to 2027. And don't forget about the next-gen electric truck, which has also been pushed back to 2026. Why the shift in timelines? It's all part of a larger game plan, giving Ford some breathing room to reevaluate its EV lineup in a market that's changing faster than a speeding bullet. Trust me, they really need this time. If you take a closer look at Ford's latest sales figures, grab some popcorn because it's a wild ride. In the first quarter of 2024, Ford's electric vehicle sales took a nosedive, plunging by a staggering 20% compared to the same period last year. And let's be real, that's not the kind of news anyone wants to deal with, right? To pile on the pain, the revenue from their Model E division plummeted like a rock, posting an outrageous 84% drop, which left them with only about $100 million during those tumultuous 3 months. Talk about a rude awakening! Ford reported an eye-popping loss of $1.3 billion. Yes, you heard me correctly. That number is enough to make you sit up and pay attention. When you break it down, it means they sustained an astonishing loss of over $132,000 for each of the 10,000 electric vehicles they sold. Can you even wrap your head around that? That's a massive leap from last year's average loss of around $40,525 per vehicle. It's like they flipped the profitability switch to zero, if not even lower. This is precisely why they're taking their sweet time to rethink their overall strategy, and they are going for it. As Ford navigates these bumps along its journey, they're shining a bright light on hybrids. But why? Well, you need to think of these as Ford's trusty bridge, linking those traditional gas guzzlers to the sleek and shiny future of full electric models. It's all about creating a smooth transition that can keep them afloat in these choppy waters. With hybrid technology in focus, Ford aims to provide consumers with a comfortable stepping stone before fully diving into the electrifying world of electric vehicles. The stakes are high, but so is the potential for transformation. And in order to get to the heart of the matter easily, we need to chat about cash flow. It's time to dissect that. By April 2024, Ford had hit a remarkable milestone, selling 56,418 hybrid vehicles. That's an impressive 47% jump compared to just a year ago. Now that's definitely a reason to pop some confetti. And here is the thing. The revenue from Ford's classic internal combustion engine vehicles, especially those beloved trucks and SUVs, continues to be a major lifeline, fueling the company's ambitious EV plans. Ford's strategy for funding its electric vehicle vision relies heavily on its robust lineup of ICE vehicles alongside an expanding range of hybrid options. This is a smart game plan, allowing the financial engine to keep running smoothly as they navigate the challenging path toward a more eco-friendly and sustainable future. So, how does this cash flow magic happen? Well, it turns out these ICE vehicles don't just sell, they rake in the bucks with profit margins that can really support the EV sector. By the end of the decade, Ford aims to have hybrid options across its entire lineup, just like the F-150 and the Maverick. Speaking of the F-150, the PowerBoost Hybrid is absolutely crushing it in the sales arena, enjoying an astonishing 93.6% boost in sales. That's right, it's not just another hybrid, it's officially the top-selling full-size hybrid pickup in America. What's the secret sauce behind its success? It has some pretty nifty features, including the revolutionary 7.2 kilowatt Pro Power onboard capability. With this feature, you can power your tools and appliances straight from the truck, making it a total game changer, whether you're at a job site or off on a weekend adventure. Then there's the Maverick Hybrid, which has taken the crown as the best-selling hybrid pickup overall. In just the first 4 months of 2024, this beauty racked up a jaw-dropping 26,061 sales. That's more than enough to make competitors sit up and take notice. Here's a fun twist. 59% of Maverick buyers are coming from other brands. That statistic says a lot about its appeal as a fresh alternative to the small SUVs that usually grab folks' attention. So, you might be thinking, everything sounds fantastic, right? If Ford keeps this momentum until the EV market becomes profitable, they'll be sitting pretty. Unfortunately, that's not how it's playing out. Because Elon Musk is eyeing this newly discovered profit strategy, and he's not backing down. But it's not just about raking in more cash, it's about survival for Tesla. We have already talked about the first reason behind this acquisition. But what's the second one? Let's dissect it together. Growing the market. Ford can't keep hemorrhaging money, even with that robust cash cow in the form of hybrids. And trust me, Elon Musk is acutely aware of this reality. The truth is, the market is facing a plethora of challenges right now, and when one company hits a rough patch, it often sends shockwaves throughout the entire industry. Guess what? Those shockwaves have already started. It's been an absolute roller coaster ride lately, with all the unexpected twists and turns that have left investors on the edge of their seats, biting their nails in anxiety. Have you noticed how fluctuating stock prices have become the new normal? Take Tesla as an example. Their shares took a significant 15% hit in 2023, especially when compared to the shining days of 2021 and 2022. It's not just Tesla either. BYD is in the same boat, also experiencing a 15% drop in stock value last year compared to the year prior. When you zoom out and look at the big picture, it's eye-opening. Pure EV manufacturers together have lost nearly 20% of their market capitalization on average since 2022. Then there's Rivian, which recently saw its stock spike by 37% after landing a juicy $5 billion investment deal with Volkswagen. But don't get too carried away. It's still plummeting down a staggering 91% from its all-time high. Now let's shine a light on some of the newer players in the game: VinFast, Polestar, Canoo, Fisker, Lucid, and Nikola. It looks like they've been struggling to hit their sales goals and are now trading at significantly lower prices. If you've been keeping tabs on venture capital trends, you'll see that things aren't looking too rosy there either. In 2023, global investments in clean energy startups, including those innovating electric vehicles and battery technologies, took quite a nosedive. Early-stage investments dropped by 20% to $1.4 billion, while growth-stage investments plummeted a jaw-dropping 35% to $10.1 billion. Now, here's the silver lining, folks. Despite all these obstacles, the EV market is still on an upward trajectory, evolving at a rapid pace. Companies and investors are on the hunt for fresh opportunities that span the entire supply chain. However, as the waters get more turbulent, making cautious and informed investment decisions is going to be absolutely crucial. And that's exactly what Elon is strategizing for. If the second largest EV maker in the nation chooses to shift its approach, it could mean significant investments don't pour into the industry. Tesla doesn't want to see that happen, and that is the second primary reason Tesla has its sights set on acquiring Ford. But let's dig into the third reason: competition. Chinese manufacturers are stepping up their game in a big way, and they're becoming a serious thorn in Tesla's side, shaking up its market share and financial performance like never before. This shift isn't merely a minor blip on the radar. It's a massive wave that's changing the EV landscape forever. Let's dive into the loss of market share first. BYD, one of the heavyweights in China's EV arena, just made headlines by officially outpacing Tesla in sales for the first time ever at the tail end of 2023. Can you believe it? BYD sold a jaw-dropping 526,000 fully electric vehicles, while Tesla managed to move 484,000 during the same time frame. This marks a pivotal moment in the global EV world, where Tesla has been sitting on its throne for eons. Chinese EV manufacturers are on a serious tear, rapidly expanding their footprint both domestically and internationally. By 2022, China had proudly secured its status as the world's largest auto exporter, shipping over 5 million vehicles abroad. A huge chunk of those were new energy vehicles from Chinese brands. making waves in markets far and wide. This explosive growth has turned up the heat for Tesla, as more consumers flock to these innovative and budget-friendly alternatives. Now let's chat about some of the sweet perks that are fueling these Chinese companies. The Chinese government is fully invested, offering hefty subsidies that send benefits straight to both manufacturers and local buyers. This results in significantly lower prices for Chinese EVs, making them far more enticing than Tesla's pricier lineup. With tax breaks and incentives raining down, it's easy to see why Tesla might be feeling a bit of pressure. So what can Tesla do? Let's be real here. It's no longer just about the jaw-dropping designs and that futuristic flair. It's all about strategy and audacity. So, what's the game plan for this electric powerhouse? Let's talk about it. First up, let's explore their ambitious expansion of production capacity. Have you caught wind of the latest gigafactories popping up? Tesla's ramping up its production game like there's no tomorrow, capitalizing on the surging demand for its electrifying vehicles. They've just unveiled new gigafactories in places like Austin, Texas. It's this massive facility buzzing with activity, and another one strategically located in Berlin, Germany, which positions them perfectly within the European market. But these gigantic structures aren't just impressive to look at. They're specifically designed to streamline Tesla's production processes, crank up output, and fine-tune their operational efficiencies. In simpler terms, Tesla is preparing for a hefty production surge, which means a boatload of cars hitting the roads and far less waiting time for all those eager customers out there. And have you ever wondered what truly sets Tesla apart in the crowded world of electric vehicles? It's all about building a rock-solid community and nurturing brand loyalty that turns fans into passionate evangelists. Tesla isn't merely selling cars. They're creating a lifestyle that resonates powerfully with eco-warriors and tech enthusiasts all around the globe. Their mission to accelerate the shift towards sustainable energy goes beyond just a catchy slogan. It's the very heartbeat of the brand. This deep-rooted commitment to the environment truly speaks volumes to consumers who are eco-conscious, building a fervent customer base that rallies around the brand like a close-knit family. But Tesla's also developing a more budget-friendly compact vehicle that opens the floodgates to a whole new audience. By widening its net with this expanded lineup, Tesla isn't just catering to its devoted fan base. It's also working hard to attract potential buyers who may have thought electric vehicles were beyond their budget. It's all about embracing a diverse lineup, ensuring that whether you're hunting for a head-turning road beast or a practical day-to-day ride, Tesla has something to grab your interest and tantalize your taste. Forget those clunky, old-school rides. Tesla is shaking up the industry with its cutting-edge software capabilities, offering over-the-air updates that not only add fantastic new features, but also enhance vehicle performance, all without you lifting a finger. And let's not overlook the autonomous driving features. They turn your commute into a delightful, futuristic joyride. This relentless pursuit of innovation really distinguishes Tesla from the competition, solidifying its status as a leader in the electric vehicle landscape. But the story doesn't end there. Tesla is also funneling resources into developing its own battery cells, the famous 4680 cells. These aren't just a cool name. They're engineered to boost energy density while significantly reducing production costs. This initiative isn't just a side note in Tesla's strategy, it's an essential piece of their plan to stay ahead in an increasingly competitive market. By enhancing battery technology, Tesla isn't merely keeping a step ahead of its rivals. They're ensuring that their profitability remains robust, even amid price fluctuations. And let's shine a light on that expansive supercharger network. If you've ever worried about finding a charging station while you're out and about, relax. Tesla has you covered. They're aggressively expanding their supercharger stations, making it as user-friendly as possible for drivers to power up. This dedication to charging infrastructure genuinely enhances the ownership experience, tackling one of the biggest concerns potential EV buyers face: access to charging stations. With superchargers sprouting up left and right, hitting the road is becoming hassle-free, leaving you free to enjoy the journey without feeling like it's a game of bingo trying to find a charging spot. Now, here's where acquiring Ford's resources enters the conversation. Imagine the possibilities. With Ford's extensive production capabilities and resources, Tesla could supercharge its growth, streamline operations further, and even broaden its influence in the automotive world. So, buckle up. This is just the beginning for Tesla, as it pioneers the future of electric vehicles with both innovation and strategic partnerships. The potentials. If you've been keeping your finger on the pulse of the auto industry, you'll know that this isn't just any collaboration. It's a revolutionary shakeup that's set to change the game. Tesla has built an astonishing network of over 120,000 supercharger stations scattered throughout the US and Canada. That's a colossal power move for anyone out there behind the wheel of an electric vehicle, don't you think? So, here's the kicker. Starting in 2024, Ford drivers will gain full access to these supercharger stations. All it takes is a simple adapter to plug right in. This isn't merely a neat little convenience, it's a tremendous confidence booster for Ford's electric lineup, including the Mustang Mach-E. The ease of quick and convenient charging is a total game changer, making it way easier for Ford to hold its ground in the competitive EV space. Long wait times at charging stations? Say goodbye to that frustration. Now, let's shift gears and dig into the manufacturing side of things. Picture Ford's factories as a sprawling web of production capabilities, and when you mix that with Tesla's innovative spirit, it's like igniting a turbocharged engine in the automotive world. By harnessing Ford's well-established manufacturing prowess, Tesla can ramp up production in ways that feel like hitting the nitrous button. This is absolutely critical in a market that's ravenous for electric vehicles. With Ford's robust facilities backing them, Tesla can produce more cars and deliver them to eager customers at lightning speed, all while keeping costs in check. That's what we call a win-win situation. And let's not skim over the treasure trove of opportunities waiting in China. The EV market is absolutely booming there, propelled by a staggering population of over 1.4 billion people and a rapidly advancing infrastructure. By teaming up with Ford, which already has a solid foothold in China, Tesla can navigate this new terrain with a lot less hassle. Imagine having a trusted local guide while exploring uncharted waters. That's how much smoother it would make relationship building and seizing opportunities. But what's your take on this? Let's know in the comments. Thanks for watching. See you in the next video.